Welcome. You're watching Beyond the Headline. I'm Tamanna Inamdar. The Reserve Bank of India has hiked the repo rate by half a percentage point today. This is the second hike in as many months and was widely expected. The hike in rates is to beat back inflation that has been consistently rising in the last few months. But there was another very important statement made by the Reserve Bank of India today, that inflation for this financial year is expected to be at 6.7%. Essentially, unless your income increases by at least 6.7% this year, you are going to be in the red. Let me give you an example. FMCG companies deal with inflation by doing something called shrinkflation. So you may have noticed that if you're buying a packet of chips or a snack, you're getting a little less in it. So, for example, a packet that cost you 10 rupees in February and gave you maybe 55 grams of that snack will now give you just 42 grams. This is a good example to understand what is going to happen to your money. Your money, essentially, like all of the goodies in that packet of chips, is going to shrink. Essentially, you will get less bang for your buck. Your savings are going to be eaten into. To keep your income intact, this means you need to earn more. Now, can you do that? According to a survey released in April this year by the Michael Page Salary Report of 2022, the average hike in India Inc. will be 9%. That's the average. Now, if you are one of the lucky ones and you think that you may get 9%, you may just about withstand inflation. But remember, a lot of salaried employees spend on things which are not in your CPI. So the 6.7% number is for the consumer price index. If you are an average urban middle-class Indian, you're possibly also spending on things like dining out, entertainment, holidays, and all of these have seen a larger spike that may not reflect in this 6.7% figure. As an example, the cost of eating out has increased by at least 5 to 10%. And these are frankly moderate claims. Movie tickets, let me take that example, on an average have gone up at least 10%. And let's not even start with fuel prices, holidays, school education. If I add in what fees are now costing after inflation, that's also going up. So your best bet is to find a way to make more money. Are you going to get a significant hike this year? Who knows? Okay, so let's forget about the salaries or, the income. What about savings? Now, the average fixed deposit rate should also ideally inch up with interest rate hikes, right? Interest rates work both ways. So if your loan rates go up, your deposit rates go up. Unfortunately, not at the same pace. Look at the State Bank of India tenor right now. The highest is at 5.5%. And you pay a tax on this as well, which could be as high as 30%, depending on what your bracket is. Add to this the pain of loans. Loans typically increase and interest rates on loans typically increase at a faster pace than saving rates. Home loan rates, auto loans, personal loans, credit card payments, all of them are going to set to get more expensive. In fact, the estimate is that today the repo is 4.9%, is going to increase to as high as 6%. The question now here is, as we settle for a prolonged period of high inflation, how do you survive and how can you continue to save and invest? To speak on this, I'm joined today by Prasenjit Bose, an economist, and Vijay Sardana, economic policy expert. Welcome to both of you and thank you so much for speaking with us. Prasenjit, let me begin by getting your take on it because it's important for people to understand, and we promise here to go beyond the headline. When they see this figure about RBI increases 0.5%, what does that really mean for them? What does it really mean when you say inflation is going to be at 6.7% this year?
What it means is that not only are the prices rising today, but going forward, especially in the next 3 to 6 months, we should expect prices to increase across the board. That is what the Reserve Bank of India's press release is clearly showing, that food prices, especially edible oils, fuel prices, the expectation is that the fuel prices, despite the cut in the duties, still we may expect some increase in fuel prices in the days to come because of the international rise in fuel prices and electricity prices, energy prices. It is expected to go up in the days to come. And if you have a rise in food and fuel prices, there will be a pass-through in every sector. So actually what happens is that, over the next 3 to 6 months, you will have almost all the sectors in the services, in manufacturing, you will find to various extents the prices of the output prices
to go up, Prasenjit. We've established that prices are going to go up. My question is, what does this mean for people? Let me come to Vijay Sardana on this. I'm equating the prices going up at 6.7%. Conservative, if I'm talking about what, average middle class Indians are spending on. Not most people in this category are spending largely on food. Food is proportionally a lesser portion of their pie. Their actual inflation hit might be in double digits quite easily. What does it mean for them if they don't make at least that much more money this year?
See, definitely inflation is always a concern for policymakers. The reason is very obvious that if inflation is more than the salary rise or income rise, then what we are saying is that there is a financial stress. And financial stress, why we talk about food inflation? Because food is basic fundamental thing. If people are not able to buy what they have to eat every day, then it has a two aspect. One is the impact on health, and second is its impact on productivity. Now, these things are very vital. But we have to also keep in mind that when you are in a very unusual situation, one side you are talking about revival from COVID, then you are talking about this Ukraine war, then we are talking about other international developments, South China Sea, pressures on borders by China, and a whole lot of things. Like we are managing house as a government of India, they have to also manage the country in given resources. Government does not have unlimited resources. That is why when it comes to national economy, we have to think about workable compromises. It is not that what I want, we will get it, or what government or politician wants to offer, you will get it. You have to have a limited resources, and there are 1.4 billion people you have to take care of.
So we know all that. Yes. Mr. Sardana, we know all that. The question is,
you have to look at it. That is it. That's what we have to see.
No, but sir, do you think, 1 minute, Mr. Sardana, do you think that viewers who are watching this right now, who have just been told by us that unless you get at least a 7 to 8% salary hike, you are in the red? That means you will be eating into your savings this year. Do you think they're right now thinking, there are 1.4 billion people and the government has to think about everyone? No, they're thinking about, what can I do? How do I survive this year? If my FD is giving me 5.5%, should I put my money in equity? Is that safe? Has that given returns? Let's talk about real issues here, sir. Prasenjit, you want to come in?
Well, I think that the question which you have posed right in the beginning, I think that's a matter of great concern, because not only is the RBI and many other agencies projecting the inflation rate to go up, but they are also projecting, they're downward revising the GDP growth rate. I think the World Bank has already done it. The RBI is downward, there is a downward revision of India's GDP growth rate in this year, which means that across the board, the income of across classes the income growth will be slower. So on the one hand, there is inflation that is going up. Mm-hmm. On the other hand, growth and therefore per capita income would be slowing down. And therefore, you are actually looking at a year. You see, last year was, by and large, it was projected as if we have come out of the COVID-driven pandemic, and we were supposed to take, the Indian economy was supposed to take off into a recovery, economic recovery, which would have, meant more prosperity. In contrast, what we are finding is that the growth rate is already, it has started slowing down in the last quarter of last financial year. This year, the growth forecasts are being revised downwards, and there is a spurt in inflation. Right. And the general expectation is that it is going to go from bad to worse. So when that is the situation, I think that what contrary to what our previous speaker just said. It is just not enough in terms of talking about limited resources and government has to manage. We should ask very tough questions to the government, whether in the backdrop of these bad news emanating from the various policy establishments, what exactly is the government's plan to tackle the inflation?
Okay, Mr. Sardana, you want to come in on that? You want to come in on that? So the Reserve Bank of India's response of increasing interest rates is one based on well-known and very sound economic response. I mean, central banks around the world have been doing that, so the Reserve Bank can't really fall out of step. In fact, they were first criticized for being late with interest rate hikes. The question is, how will we as an economy now, mitigate some of the impact of that? Now, I'll tell you what the concern is, Mr. Sardana, before you come with your response. The concern is people will postpone decisions to buy homes. People will postpone decision to buy cars on loan. People will postpone decisions to buy consumer durables, TV, AC, fridge. That's not good news for the economy at all.
Very true. Now, give me 2 minutes. Let me elaborate for a common man's point of view. You have a family income which is fixed.
Yeah.
Your kid wants to have a new motorcycle. And another kid wants to have a new something fancy item, but your income is limited. What do? You have to rationalize your priority in the system. Similarly, you do not have to ensure that whatever you are thinking, yes, in tough time, you have to rationalize and prioritize your decision. I agree. I have to, if as a citizen, if I have to postpone my purchases, I have to do it. And that is what we have to look at it, that when situations are extraordinary, I'm not here to say that no, government will take care of everything. My only answer to people, those who are raising issues, I also expect them to give the solutions. Because if you are simply saying going up, production is going down, inflation is going up, everybody knows it. What is your answer? Point here comes up is that there are two types of issues. One is which you have to manage internally, and second is external factors which is beyond your control. And this is what we have to understand. I'm not saying that hardship is not there on citizens. Everybody is suffering from that. But fact of the matter today is that we have to understand where the priority is. And what my request to Government of India is that in a society we have vulnerable section of people. Ensure that they get enough food, even if you have to continue.
Prasenjit Bose, Mr. Sardana has a point about solution. That if you're going to point out the problems, let's point out about the solution. And as far as the question of food security is concerned, well, the food security schemes that were on from COVID-19 have been extended. They are persisting. Let me come to the point of what happens when the consuming section of the population reduces discretionary demand. It's not about a child wanting a motorbike and not having to buy it, and that's the problem with the family. That becomes a problem for the country, because the company making those products then has to face with reduced demand. It reduces its manufacturing, reduces the number of people it's employing. Are we understanding the impact of all of that? Yes, Mr. Bose.
Well, I think that I perfectly understand the impact of it. I am not sure whether either the government is aware of the impact of it or the other speaker is, he really understands what he is talking about. Here is a situation where you have a very discernible deterioration in the key indicators of India's macroeconomy. And it is the central bank which is coming up with these projections, saying that growth is going to slow down over this entire fiscal year, that inflation is going to go up, and it is saying that I am increasing interest rates. Now, first of all, interest rate hikes, are not enough to check inflation. They just send a signal. There are many debates in economic policy, how effective it is. We can safely assume that in economy of India's size, it has a very limited and that too a very lagged impact on the price level. It won't impact tomorrow. It may take 3 to 6 months for this interest rate hikes to actually have an impact on the inflationary process. What you actually needed from the side of the government were proactive measures to prevent this from happening. They did not do it. So already the failings of the government are there for everyone to see. They persisted with very high duties on petrol products. So they allowed the international rise in petroleum, energy prices to spill over into the Indian economy in a very disproportionate manner. Now they have cut it, but that too, it is a half-hearted cut. Much more needs to be done because the fuel prices in India are still very high. Now what has happened is that the fuel price hike has already spilled over into food price hike. Now the government has several things to do with regard to that. It has simply banned wheat exports. But what about procurement? What about measures to tackle?
Mr. Sardana, your response. Prasenjit is making the point that it was the high taxes on fuel which were taken for a long time through the pandemic. Remember, and even before that, 60-70% of the MRP was just taxes. And that has now had quite a big impact on inflation, which has become stubborn and set into the economy. Maybe it was, a miscalculation there to keep collecting these taxes at such a high rate. Mr. Sardana, your response to that?
Tamanna, I think your point is, not looking into the whole situation. It's very easy to say what my previous speaker is saying, all these things are happening. It's a common sense that if international prices are high and if you have to feed 80 crore people with free food and ration, who will pay for it? Are you saying that America will give you donation or World Bank will give the donation? You have to collect money to buy the food from the farmers and distribute to 80 crore people. Now, who will pay for it? The point here comes up with either you go for a begging. I'm not disturbing you, my friend. I'm not disturbing you. Please have patience.
1 minute, 1 minute. Prasenjit, what is happening? 1 second, 1 second.
Have patience. Don't jump. Now, point here comes up is, if you have to feed 80 crore people, you have to collect money. Who will give money? Are you going? There are two options. Either you print the notes, continue to print the currency, which will lead to highest level of inflation. Okay. We have seen whichever country has printed the currency are suffering from inflation. Sri Lanka is one example. Second example, we have to look at it. Either you have to collect from domestic resources. Or third option is you borrow from the bank. Your 25% of budget is already servicing the debt taken by previous governments till date. Now you want to add further burden on it, then what will happen to your development fund? So you have to take
okay. No, so let him respond to that. But let's go point by point. So it's a cogent discussion. No, you talked about the need for high taxes to fund benefits like free food. What were the alternatives was your question. I think it's a valid question. Let Prasenjit respond to that. Prasenjit, he talked about before that if you raise a question, you should come up with a solution. Were there any alternatives? My question to you today is that could India have avoided this when the whole world is suffering from high inflation? This is not just an India problem.
No, of course it is not an India problem. I don't think that anybody has claimed it's an India problem. The point is that what the government could have done to moderate the inflationary upset. Because India is structurally prone to high inflation. If you look at comparative historical data, you will find that India, let us not forget what happened in the last phase of the UPA government. And what was behind the anti-incumbency of the UPA government, it was high double-digit inflation. This government should have learned the lesson from it and kept done whatever is in its power to keep inflationary pressures low. It fell for that trap of milking the petroleum sector, the fuel sector, and Mr. Sardana is under the impression that the only way to raise taxes in our country is to tax fuel. Why? The same finance minister whom he is crediting of providing subsidized food to the pandemic to the weaker sections, he provided an unprecedented tax bonanza to the richest segment of Indian economy, that is the big corporate sector, just months before the pandemic struck. Today, the corporate tax rate in our country is at its lowest. So does he, is he aware of the fact? Or does he think that that indirect taxes is the best way to...
Quick response from Mr. Sardana. Quick response from Mr. Sardana, and then we'll sum up. Yes.
I think Mr. Prasenjit does not understand how the economy works. Today, you go one side. So please appreciate that. Because what I'm saying is, if you had all the manufacturers and investment in the country, why you had to bring a PLI scheme, production linked incentive? You have to encourage investments. And
Yes.
one of the deterrents in the country was high taxation. One side you want employment, then you want to have high taxation, then you want to have a cheaper food, then you want to have all the subsidies and everything possible. My point to Mr. Prasenjit is that if you understand all the game plan, why don't you put a white paper how government of India should manage economy?
No, no.
That will help the
One
government.
minute.
Instead of
1 minute. 1 minute.
saying,
This is not 1 minute. Mr. Bose, Mr. Sardana, this is not a I am smarter than you or I understand the economy better than you conversation. 1 minute. Let me just come in here. The low corporate tax rate was hailed by everyone all around because India has very high corporate tax rates and it was believed to be stopping industry from expanding. But the fact also is that since that low corporate tax rate, industry has not really shown private investment at the rate that was expected. One of those reasons could be the pandemic. So this is a more nuanced discussion than we're having right now. But I have promised my viewers that we're going to give them a survival guide to inflation. Are you ready to give them something useful as we wrap up this discussion? What do you do? Is your answer, Mr. Sardana, that too bad? Now just live with it. You know?
No, I think it is.
What do you do? What can they do?
Like we do in houses, first decide what are your priorities, focus on that. What you can postpone for the timing, postpone. But also important point is, part of your saving, invest in market-linked instruments like mutual funds so that you come up against the inflation. A fixed deposit is not a cover against or hedge against inflation. You have to link yourself with the mutual funds, high-rated mutual fund, so that whatever inflation happens, you have some more return so that you cover part of your inflation. So financial literacy is very important.
Okay, so you're saying mutual funds go in for equity, but you have to know the risks with that. Your capital is not necessarily protected. You have to understand. Prasenjit, your advice right now to people who are watching and views that they can use.
Well, as far as people are concerned, I don't think that they need advice from either me or anybody else. People have in our country, they know, especially the poorer people and in the informal sector, they know how to absorb such shocks. But it will be through belt tightening at a household level, at an individual level. But what I want to advise or suggest to the government is that please shed your complacency. We are in for tough times, and if you are not taking measures to check food inflation in a timely manner, you failed on the fuel front. You cut your fuel taxes much late in the day. Now inflation has already spilled over to the other sectors. Now if you flounder on the food price question, you will meet the same fate as the UPA 2. So this is my only advice or forewarning.
I'll wrap it there. Thank you, Prasenjit Bose. Thank you, Mr. Sardana, for joining us. But, as I move on from this story, what experts have been telling us on what you can do at these times of high inflation. One of the things you can do, especially if you have an EMI or you're paying loans, look at the possibility of prepaying your loans because interest rates are only going to go higher. You've seen a repo of 4.49% is expected to go up to 6%. So there's a lot more of that hike coming up. So that is one of the options you can look at. Of course, discretionary spending is something you will have to think long and hard about and figure out your long-term plan because this is not a situation which is going to change very quickly.